Talk about business porn. That's not nice. Anyway, I know that when I see it. We're waiting for Jackson Hole. Investors anticipate what Jay Powell is going to say about tapering. Our next guest says the Fed itself has become too prominent, too political, and too powerful. Joining us now is Judy Shelton, senior fellow at the Independent Institute, former nominee to the Federal Reserve. Judy, you've got a pretty good prediction about what Powell is going to say on Friday, and it's basically nothing.
Well, I think he is going to be appropriately vague and perfectly non-committal. We'll hear a lot of the same phrases we've been hearing for months about the Fed using all its tools to support the economy. He'll say that at the Fed they're seeing progress, but he won't say whether that meets the Fed's definition of substantial further progress. So overall, I think he'll hit all the bases. I think he will not completely satisfy, but he will mollify listeners on Capitol Hill, on Wall Street, and in the White House.
And that sounds pretty good. Like it doesn't matter anyway. And that's where you would say it absolutely matters. And this is no way to run a country or to run the Fed.
Right. I think it matters entirely too much. To have markets be so substantially moved by the utterances of a handful of officials at the Federal Reserve, I think is no way to run monetary policy. I was in the room in May 2013 when Ben Bernanke, who was chair of the Fed, was testifying before the Joint Economic Committee. And they were badgering him about when are you going to start cutting back on quantitative easing? And he kept avoiding it. And finally, he said, well, maybe not in the next couple of meetings, but after that. And the room just exploded as reporters went to report that it could be in September that the Fed starts cutting back on its purchases of government-backed debt. We had triple-digit gains going in the Dow Jones average that day. That went negative. Japan's market fell 7%. It came around to Frankfurt and London and Paris the next day. Ultimately, I think our markets lost 3% in 4 days. And the weird thing is, by September, the Fed had pretty much chickened out, decided not to do that. And by the end of the year, the markets were just about where they had been. So I don't think financial gain should be won or lost by being able to interpret the nuances or look for hints at what Fed officials are saying. That doesn't work for the rest of the people in the economy who make their money actually producing things or providing services. And
you probably don't have strong feel. If I asked you about whether Powell should be reappointed, you probably wouldn't say anything mean about that. Oh, wait a minute. Actually, I don't think he should have been appointed in the first place. So I guess you don't think he should be reappointed. Why?
Well, I think there were better choices in the first place. I think John Taylor, whom I worked with at Stanford University, is not only a superb economist, but he believes that monetary policy should be more rules-based and not just a matter of the discretionary judgment of a dozen people. I think that John Allison was considered. He was interviewed for Treasury Secretary. He ran BB&T, regional bank, very successfely. He had a think tank in Washington. He would have been a good choice. What problem do you have with Powell?
He had to navigate the Fed through the pandemic, and the stock market hit, NASDAQ and S&P hit another new high yesterday. The recovery that we've seen has been a very fast snapback. There are certain sectors of the economic world that just give endless kudos to what Jay Powell has been able to do. Does your criticism, for it to come true, do bad things have to happen in the future for you to be proven right?
No. What my issue with Powell would be that I don't think his analytical framework is correct. I think that he is drawing now the wrong lessons from his own experience. He was appointed in February of 2018. He raised rates at the very next meeting in March, and then again in June, and then again in September, and again in December. And it turned out that the very next year he had to pull back 3 of those rate increases. So now he's saying, I made a mistake. I shouldn't have done that. We had record low unemployment. It was particularly beneficial to low income and minority workers. They were getting wage gains. We had real GDP growth. There were so many things that made that economic nirvana that I don't want to make that mistake again. The irony is that there was one person blasting him in late 2018, and that was President Trump, saying you shouldn't be continuing to raise rates. Well, now things have changed. In those days, we had a pro-growth agenda that included cutting taxes on business, cutting back regulation. We had energy and trade reforms. Those were the factors that were powering that excellent growth. We now see that those are all likely to be reversed under the Biden administration, and yet Powell is going ahead as if monetary policy, which had been erratic in 2018 and 2019, was the driving force. And now we have inflation, which we didn't have then. So I think he has the wrong prescription because he drew the wrong analytical lesson.